Michael Opari Adu, and I'm a course tutor for corporate financial analysis. In this session, would be dealing with the importance and benefits of financial statements analysis and interpretation to financial users. By the end of this session, you should be able to identify the various users of financial information as well as their information needs. You should be able to explain the relevance of financial statement analysis and interpretation to users, and also explain why it is difficult for companies or customers to undertake financial statements analysis. So you would want to brainstorm on why firms or customers find it difficult to analyze financial statements. So there are a number of users of financial information. Usually these people or these categories of users can be classified into the various stakeholders. Some of them are internal people and others are external parties. So the following are some of the categories of the stakeholders of accounting information or financial information, or in other words, they may be referred to as the users of financial information. They include management, suppliers, customers. Suppliers can also be referred to as trade payables, and customers can be referred to as trade receivables. There's also owners, investors, both prospective and current investors, governments and government agencies, employees and trade unions, the stock exchanges, economists, bankers or banks, and also research scholars. Now we would analyze the information needs of these users and how analysis and interpretation influences their management. The management needs information in order to plan and fulfill other management functions, including determining the credit standards of the company, ensuring or assessing the efficient use of capital, and also improving the financial position of the firm. Now, financial statement analysis would help management to measure the effectiveness of their policies, also to determine their ability to adopt new policies and procedures for the operations of the firm, and also to measure their managerial efforts. It can also help them to assess the relative efficiency and weaknesses of different departments that forms or that handles various aspects of the business operations of the firm. When it comes to suppliers, who are also known as trade payables, financial statement analysis reveals the exact financial position of the firm and can also suggest the ability of the firm to make payments in future. So through analysis, trade payables or creditors or suppliers can get to know if the firm is credit worthy and therefore if they can continue to grant trade credits to them. Also, they can also assess, suppliers can also assess the capacity of the firm to pay external parties, of which they are also one of them. And also it can help them to get to know the solvency of the firm. By solvency, I mean the ability of the firm to meet its long-term obligations as and when they fall due. In terms of customers, who are also known as trade receivables, customers of firms find financial statement analysis very useful because it can help them to know the cost structure of the firm, possibly the profit margin that firms obtain when they sell to them on credit or on cash basis, and also to know the credit policies of the firm, if the firm grants trade credit or if the firm can give goods and services to them on credit and then they can make payments at later days. So understanding them and these issues helps in prudent decision making. So if you're a customer and you know the firm you're engaging in does not give or render credit sales, then you would want to reconsider, because there might be the situation that you may not always have the cash to pay upfront for goods being given or services that will be rendered to you by the firm, and therefore customers will find financial statement analysis very useful. When it comes to government or government agencies, so the registrar is It's expected to acquire copies of financial statements for assessment. So they would want to know whether the firm is preparing statements in conformity to the rules and regulations of the state. Like I said, the Companies Act of 1963 requires firms to publish their annual reports or make their financial statements available at the end of every financial year. So the government would also want to know the financial position of the firm or companies in order to know their taxable income and their net worth. And one reason why governments would be interested in the financial statements of companies is because of the fact that it needs to mobilize tax revenues. And like firms are supposed to pay income tax as well as other taxes. So yes, for tax revenue purposes, governments would be interested in the financial statements of firms, and also for them to confirm or affirm whether the firms are abiding by the rules and regulations of the state. So when it comes to banks, financial statement analysis is very crucial to banks, particularly in making credit extensions to these firms. So there are firms that would want to secure funds from banks. So the banks would require to know the current financial position of the firm, their liquidity position as well, whether the firm has good credit standing, their earning capacity, asset distribution, and future development programs. So the firm or the bank would not want to lend to a firm that wouldn't employ the funds in profitable ventures. Therefore, it's very necessary for banks to undertake financial statement analysis before they extend any kind of credit line to firms. When it comes to employees and trade unions, we mentioned earlier that although firms are separate legal entities, their operations are being run by employees or people, and these employees also belong to trade unions. Therefore, they would also be interested in the operational performance of the companies in which they work. So, the employees would want to know if their job is secured. They would also want to know if the wages policy is fair. They want to know the degree of exploitation, the working conditions, whether the work environment is good enough, and all those things. And mind you, all these things affect the quality and quantity of employees that a firm can actually attract and retain. And like we mentioned, people are some of the valuable resources that firms could have. And you can never undermine the human resources of a company. For some companies, their human resources or their employees are one of the key comparative or competitive advantages they have over certain firms in their industry. And therefore, you would not want to belittle the efforts of employees and trade unions, because any agitations from them can make the firm lose a lot of money. And therefore, you'd want to consider their needs and also make sure that the firm is in good standing with trade unions. And also, when it comes to investors, they can be current investors or prospective investors, and they have peculiar interests or needs, and this can be revealed through financial analysis. So these before an investor would want to invest their funds or their resources into the business, they would want to know the potentialities of growth, the managerial ability. Are the managers very efficient? Are they competent in doing their work? Are they being considered good stewards who can give good returns on the investments that they make? They will want to know the future change in capital structure, whether the firm is employing more debt or equity. They will also want to know the earning power of the firm, whether it is adequate or not, potentialities for future development, the firm's earning capacity, as well as the soundness of dividend policy. Dividend policy is very crucial to most investors, because there are some investors who are in for capital gains. There are some who are also in for dividend. So you'd want to know what kind of or what category of investors you would like to attract. And also the soundness of your dividend policy would also influence the kind of investors you attract. Overall, the degree of financial growth is also of interest to investors, both current and prospective. And these will help investors make informed decisions as to whether they should invest in your company. When it comes to owners, are more or less, we although we say the firm is a separate legal entity that's distinct from its owners. However, owners are shareholders and they are people who have invested capital into the firm. So they would want to know, of course, if the money they have invested is being employed efficiently and effectively from the perspective of risk and return. You know that managers are supposed to act in the interest of owners. So they would want to be sure that every decision or risks that are being taken by management are worth it, and then they would get return on their investments or the capital they've invested. They would also want to know if the business is being managed effectively or efficiently. And the only way they can know this is when the financial statements of these companies are being analyzed and interpreted to them. And that's the aim of financial analysis and interpretation. There are stock exchanges of various industries, or shares of companies are listed on various stock exchanges. So in Ghana, like this, we have Ghana, the Ghana Stock Exchange, which is being regulated by the Securities and Exchange Commission. So there are a number of listed firms, and by law, they are required to publish their financial statements every year. And these financial statements reveal the operating performance, the financial strength, and also the stability and the share prices of these firms. So Ghana Stock Exchange, for example, has this policy that has been instituted called the facts behind figure concept, where investors and regulators meet companies who publish their annual report and they get answers to certain pertinent questions or information that they would want to obtain. In conclusion, we can say that analysis and interpretation are very relevant and beneficial to a wide range of users according to their specific or particular needs. We also discussed the importance of analysis and interpretation of financial statements to this wide range of users. Thank you.